Okay, good afternoon. Welcome to the weekly take on the market. Today is Friday, January 10th. It is 1:15 Pacific time. I will be your host. My name is Scott Sinclair. I'm the product manager here at Investors Business Daily Premium Product Group. So MarketSurge, Leaderboard, Swing Trader, et cetera, et cetera. Please take a moment to read the disclaimer. I'm not licensed, can't tell you what to buy, what to sell, how many stocks you should own, what your exposure should be, whether you should short stocks or not. These are all things I like to talk about. And one of the great perks of working here, because I have mentioned this before, is being able to invest my own money, family money, fairly freely under that compliance umbrella, and I don't want to mess that up. This is pretty important. Okay, so we'll talk about the market indices. I know it's only the 10th of January, and yesterday the market was closed for the remembrance of President Carter, and incredible the action that we've had in just, what is it, 5 or 6 trading days. So we'll talk about the indices, stocks to watch, industry groups, quote of the week, the typical drill that I like to follow each week. So let's talk about, I guess we'll talk about the NASDAQ first. So you get your first close below the 50-day. It did try to rally a little bit in the middle of the day, kind of a feeble rally. And then, close mid-range, so to speak. That's not including the gap. So really, the closing range is, well, we don't have pattern rec because it's an index. So it looks like it's midstream, but it's really lower range because you're missing the gap. Remember, the market opened here, and then on the jobs report, gap down. So I'm quick to get fairly bearish, unfortunately or fortunately. It just depends on what year it is and how the market plays out. So I was kind of anticipating something like this. When you get this bad break and then the market can't make new highs, and then it breaks and then it can't make new highs again, it just feels like the indexes are fairly weak. Now, overall, there are some stocks holding up really well, and we'll talk about that, but it's hard to be positioned in them, at least in size, because if the market gets really bad, they'll rug pull those, and they won't hold up. And that's the hard part as far as trying to hold individual stocks when you have the whole market kind of in a fluster here. So I don't know what to make of the indexes. I have been shorting them kind of as a hedge, or it allows me to be long some of these names that I want to be. So I guess there's two ways I could do it. Instead of being long 1,000 shares of XYZ, maybe I could just be long 500 and not be short the market. I can't seem to bring myself to that. When I see something I like, I just want to have a full maximum position that's going to move the needle. But then sometimes the market was closed on Thursday. On Wednesday, I knew the jobs number was coming. I just feel very vulnerable to that. So I will be short something. It works as a hedge a little bit, but also it's something I think is not acting well. And so it allows me to be positioned. I haven't read this in a while. I think I'm going to read this again. It's Robert Wilson. He was a famous short seller. The book's called Killing the Market. And the one thing I remember from this book that sticks out to me is he's known for being a famous short seller. Well, there's two things. He got run over in a hotel short, IH International Hotels or something like that. It's a great story. Well, great story. He turned out okay in the end, but he got really, it was like one of these horror stories from being short. But also he feels like he's never really made a dollar being short. What being short allowed him to do was to stay long the names that he wanted. And that really resonated with me. I really thought of that when I read that and thought that I like that idea. In theory, now it's obviously a lot easier in theory than it is in practice, but it just sounds so much better. And if you can make it work even partially, then you can stay long the NVIDIAs, the VSTs of the world if you want. If you have low cost stock, the apps, the Palantirs, And these pullbacks don't hurt as much. One thing about trying just to ride through these corrections in the market is they're brutal. We'll pull up Palantir. You know, the Nasdaq's what, 5% off its high, if that, and Palantir is 25% off its high. So it just, if the Nasdaq goes down 10, 15, 20% off its high, at some point Palantir probably would kind of slow down at that ascent down, but it could be 40% off its high. And the math is just cruel. 40% off the high, you basically have given up. You could double the stock could be a double for you, and you've basically given it all back. So I like to do that. I know it's not for everybody, but that's my philosophy. So the indexes, you know, NASDAQ relative strength is okay. It's not terrible like it once was, but it's just okay. And the S&P, I think, is a little worse. Yeah, so it closed a lot worse. It undercut these lows, whereas the NASDAQ didn't. I apologize. Well, it's close. Very close. But it's a little more clear in the S&P. So this, to me, looks like a better short than the NASDAQ, but really the best short. And I almost put in the ticker for the Dow Jones futures, but the Dow has been the better short. And I don't, you know, Apple, we'll pull up Apple, is, you know, it's one of them that this just looks really poor. So it's under all the moving averages, making new lows. Probably first stop is, you know, the 200-day. It hasn't been there in a long time. So, so this looks definitely a lot worse, and the relative strength is telling you so. The Russell, I just don't play with the Russell. I don't mess around with the Russell. I don't like it upside. I don't like it downside. I just don't like it. I don't like the way it's structured. So I don't do much. I honestly do nothing here. There was a time Druckenmiller had a big position, maybe 6 or 8 months ago. He had a big call position in the Russell, and I was very tempted to be involved. I feel like it was this move here. And I'm fairly certain it was here. And I remember everyone thinking, oh, it's finally going to get going. It's so strong. And it just fluttered. And he got out of his calls. I'm presuming he did just fine in them. I don't know I just know it was on his sheet one day, and the next time I pulled up his 13F, it was gone. So in order of strength, you got the NASDAQ, which is the leader. Obviously, the NVIDIAs of the world are in that one. S&P, Dow would be the third horse in that race. World markets are, look at here. So here's Japan, you know, made its high in September. What else would be like something like, Argentina has held up well. Let's see how Argentina is holding up really well, but it's just such when you think about like the MSCI World Index, I mean, what could Argentina be as far as a percentage of it? Very, very little. EEM, emerging markets, just, I mean, not very good at all. They made their high in October. China, just incredibly bad. I don't know. It's funny. There was a guy that I follow who was bullish on China, and intellectually it kind of made sense to me. But as a trader, it doesn't make sense. They go up, but they don't stay up, these stocks. And then he came out with a Substack where he basically, like a mea culpa, where he said, you know, I think maybe I'm wrong on China. And that was very interesting. So I don't know if he was long China or any of that, but it just goes to show you why you kind of have to follow your own light. I listened to him, but in the end, I have to follow my own light. I put all this information together to make like a puzzle piece, but in the end, I have to follow my own light. I have to put the trade on. I got to take it off. If you rely on somebody else, that can be very difficult for sure. So this looks terrible, and like, you know, Chinese bonds are pushing like 1 and change, so very deflationary there. So, you know, a lot of cross currents and things here that make me very nervous about the overall environment for equities in the big picture of things. but like I said, I tend to, I don't know where, I think it maybe have been the 2001, but I can give you a great story on 1998. So if we go to the weekly on the NASDAQ, and I'm gonna go back to the 90. Let me turn my camera off just in case it's in the way. So here's the great financial crisis. Nice double bottom, really good move. But in 1996 in December, sometime in here was when Greenspan came out with his irrational exuberant speech. So if you look at like the market in 1996, I'm fairly certain it was in December of 1996, like right there. But anyways, um, the market had gone from just on this scale, 500 to 1200. So it made a big move. So when we got into this period here, I'm going to go to the daily on that. There was a lot of things that told you that, the market could go down a lot because it made a big move. And I remember being very, very bearish in that time frame. Let's go November of 1998. So you get a really bad break, market tries to rally, and then a really bad break. But the system at that time, it just told you, oh, that's fine. You can be bearish, Scott, or anyone. Day one of attempted rally, day two of attempted rally, day three of an attempted rally. I'm not counting the pink rally day. Day four of an attempted rally. So maybe this is your follow through day if you count the pink rally day. But if you didn't, boom, right there, this day says, time to get back in, time to start looking for buys. And I remember thinking, I'm going to ignore that one because I think the market is, extended. It's in a bubble. It's in this, it's in that. And please ignore this is a bad tick, but it didn't do that. But you can see how it just was relentless to the upside. So the system told you to be long, and that's all that kind of really mattered. So I have my feelings, and I'm human, and I think these things, but I try not to let them influence my trading too much because to me, price and volume and leading stocks, they tell a better tale than the indexes. The indexes are very good at fooling you, I think, at least for me. So I think we're kind of in no man's land is the bottom line for the market. I don't hate it enough to be like all bared up, but I definitely don't love it. So we'll just play it day by day. Let's go to the industry groups. Telecom, fiber optics, transportation, airline. This is another great learning lesson. It comes out of this area. And today, like UAL was up, I believe today. Yeah, though it did give back a little bit of the gains, but like, gosh, look at that relative strength of 98. I would be willing to bet that UAL has never had a relative strength of 98. It's incredible the strength in that area. So it was all there. It's all there for you right in the charts. I didn't buy it. I had a bias against it. How much, how growthy, how much could it go up? But it's all there for you in the charts. The strength of that group. Education, software, security, safety, internet network solutions. I have a stock in that group. Telecom infrastructure, machinery, oil and gas. So I don't know. Utility is it making it? So what I'll do is 129, 45, 31, 17. So oops, I was in the wrong area. I apologize. 57, 17, 14, 16. I know VST and CEG had pretty good days today. CEG had a very, very good day today. VST had a pretty good day. Relative to the market, had a fantastic day. So that's why looking at these is important, but I just haven't got as much of a signal as I normally might have in previous timeframes. Okay, so let's. Oh, you know what? I want to look at the slides I had before I keep going. Let me backtrack. I apologize. I jumped the gun. So, going forward, in 2024, pretty much everybody was looking for a recession, like late 23, 24. Everyone thought there'd be a recession. The average return forecast for the S&P was 7.4% by analysts, 1.3% by market strategists. The actual return last year was calendar year was 25%. The year before that, analysts had predicted a 17% gain for the S&P, and strategists a 6.2% rise. S&P was up 26%. So, 17 to 26. I mean, they predicted a pretty good market and was up good. But the strategists were missed by a country mile both times. So naturally and I got this from the Wall Street Journal. I think it was Jason Zweig's article in the Wall Street Journal. Naturally, after 2 straight years of 25% plus returns, fool me once, shame on you. Fool me twice, shame on me. Guess what? Everybody's all bulled up. So they've cranked up their forecast to 13% and 12.5% respectively for 2025. So a lot of investors, one of the great kind of mistakes investors make is they invest through the rear view mirror. The market is going forward. The market is anticipating what's going to happen 3, 6, 9, 12 months, whatever number you want to put on it. The market is going forward. It's not looking in the rearview mirror, and people tend to extrapolate what they see in that regard. It's just a natural human flaw from an investing perspective. So everybody's all bulled up now, and it doesn't mean that it can't have a very good year, because that's possible, but based on their historical track record, makes me a little nervous that it's not going to be all that great a year. It could be very, very choppy, which is so far what's happened. We've had some lot of. I know there's a period where the S&P went days and days and weeks without a 1% move down, and I think so far this year we've had 2 of them maybe or something. So I just feel like there's going to be a lot more volatility built in. New ETF launches. So it's a lot like a restaurant. You can sell people what they want to eat or sell them what they should eat. I've never been in the restaurant business, but I imagine if you try, unless you were able to meld those two together, which is like the ultimate restaurant, if you can get a restaurant that can serve you what you should eat and you actually want to eat, you'd be golden. But Wall Street just brings out what people want. They're not creating great products and saying, hey, here are these great products that can really benefit you. They are, what's the narrative? Narrative is a big word I like to use. What's the narrative in the market? Oh, the narrative is crypto. Boom, let's jam a bunch of ETFs there. What the narrative is, 0-day options in general. Boom, single stock ETFs, levered. Right? Palantir has one. Tesla has one. NVIDIA has one, because you want to be able to double buy NVIDIA or double short NVIDIA. Boom. There's a narrative there. Let's create all of that. So there are just a plethora of ETFs out there. And I would just say I use a lot of these products, but caveat emptor, is that the saying? Buyer beware. Understand what you're buying when you buy these levered and double levered and triple levered up or down ETFs. There definitely are flaws in the way they're structured, in my humble opinion. All right, so we did industry groups. Let's go to stocks to watch. So let's start with like the big boys. Make sure I'm on today's date. So NVIDIA was at CES. Stock made a new high and had a really bad bar. Look, it's three days off an all-time high. But what I would say is kind of different type of thinking. NVIDIA has made no progress since June 18th of last year. So since if you bought it June 18th of last year, you're basically flat. So I just think it's going to be a big sideways nothing burger in a long drawn out range, something like this. Now this is 60 down to 20. It's a big move down. So maybe that's going to be, for it to go down that much, it'd have to be market related. But it just seems like it just needs a long time to digest the massive move that it's been. It's been a great leader. That's my 2 cents. I could be wrong. I reserve the right to be wrong about NVIDIA. Tesla. So interesting day today. It actually was sorry, I got distracted by that. That's not, how could it be at 394, down 20 cents, but at 394, up 7 for the day? So down a little bit for the day, hanging in there on the weekly. It looks like, it's right at that 10-week line. We'll have to wait and see, but holding up pretty well. Apple. So Apple looks fairly broken. Had a bad day today. Maybe got a downgrade or something. Quarterly earnings and sales are very pedestrian. It's a market stock. Apple's going to kind of go the way of the market, or is it the tail, or is it the dog? I mean, Apple practically is the market. Amazon holding up really well. Google, not too bad, right? Still holding the breakout. Netflix. So Netflix looks like that's kind of a defensive sell signal. If you bought that and you're waiting for a defensive sell signal, it triggered today. And what else would I consider kind of in that basket of stocks? I think that's pretty much it. I'm looking at my screen. The one that I like to trade, not Fang down, that is Fang up. And so very interesting to me. Have, one, two. Now it is levered, so but you have kind of a massive double top potentially, and it is levered, but gosh, it's gone from 30 to 600. So if the market were to go into bear mode, this would be my pick du jour. This is where I would be focused. I have this trend line drawn and this trend line drawn. I really like to see it kind of break there, because then you would have anybody who bought here, all of these buyers in that area would be trapped. And so I'm kind of waiting for that. So let's go through some other ones. So app, still above the 50-day if you're trying to hold on to it. I listened to Ali on the podcast yesterday, which is very good. And this, I don't know if she's still in this one, but this is how she would, still above 50 days, she would hold it, is my understanding. Palantir, so it's very close, right on the 50-day, kind of testing your metal. But if you look at like a weekly chart, a little bit lower than that. It's not doesn't look as form fitting as app does, that's for sure. What about like the Bitcoin stock? So MicroStrategy, so it's right on the 50-day. How about IBIT? Holding up. I just, if this was a stock, it looks fine. I think you could still be long it if you had that type of strategy of buying it here or here. What else is out there? So let's kind of dig into some of the ancillary stuff that I had been watching. So Antero broke out, got a little tired today, but that's holding up really well. If you look at the weekly, and relative strength is really improving. Obviously, as the market goes down, it goes up. That's a big deal. CRDO, which I am long. I did buy CRDO. So I bought it here. I sold a little bit there. Did I know it was going to come down? No, I didn't. I just what I do. I buy a certain amount and it starts to go up. I tend to peel some off. But now I'm back to more of a full position again. I don't love the market, but gosh, I sure love the way this is holding up compared to the market. So this in the quality, look at the earnings and sales. VST. So I actually bought this today. It hasn't did it break out? I don't think it triggered I guess it did. It did go above the pivot. So you had the news of CEG buying Calpine, I believe. And funny thing is I did not like this stock at all. It's just so sloppy, just such a bad, and I've, bad mouthed it on IB Live, I'm sure. Of course, now is up 25% today. So it goes to show you this how important, how strong the story can be. And the story is really strong here. It's a big day there. So VST, CEG, what about Talon? Didn't do a whole lot today, but relative to the market, these were really strong stocks. They acted really well. Of the ones I just showed, the VST is the only one I own. The AI data centers, Nebius. Now no earnings, but the net change was 50%. Revenue, look at the revenue. It must be a roll up or something, 700%, that type of revenue to go from 43 to 5. I haven't dug into the weeds too much on this story just yet. Spin-off from Yandex, Netherlands-based AI data center narrative. And the price action was super compelling today, just strong all day, just kind of pushing highs most of the day. Super speculative is my guess. I don't know enough to say that, but that's how I'm treating it personally. But I do definitely have a position in that one. What else made a move? NTRA. So closed pretty well. It did, yesterday it closed here. I thought, oh, good, it's going to open higher. And in after hours, it actually was up a little bit. But then, the weakness in the market's not going to allow it to do that. But it had an okay day, down $1.60, down, less than the market, which is what I'm looking for. GMed. So this is kind of the problem with it, swimming upstream against a poor tape on the market. That had really good news overnight, I believe, and couldn't hold the gains. I mean, it was still up, but only up 50 cents. LB. So if you go to the weekly, it's building. Bear with me. I want to go back. It's building a cup, finally building its first stage. And the narrative here is they own a bunch of land in Texas, and maybe they could build a bunch of data centers on there and use the natural gas that's in the ground to fuel those data centers, and AI, blah blah blah, and you just get this big story, and it sounds super super compelling, and it's all great. It sounds awesome to me, as long as stock goes up. So I do own this one, and it's acting really well. Again, it had a pretty good day today, and against the market environment, had a really good day today. Just going down my list of stocks here. I talked about Tesla already. So on the other side, you've got some stocks that I don't know that you want to run out and short them today, but these are the candidates. Like if this were to go here, Carvana is a candidate for me. Blackstone is definitely a candidate for me. I did short it there and then got out that day because I just got wiggled out. I thought that was Wednesday. I was a little bit perturbed by the strength. I thought that'd get a little bit more fall through day. Didn't, to downside, and I thought, oh, maybe it's going to go back up to 180. I got out, and so I didn't participate today. But this looks like a nice thing with, well, nice is not the right phrase, but I'll use it. The nice thing about Blackstone is you're not going to get run over if you were to short something like this. And if the market goes down, the correlation is super high. You're going to get downside if it goes down. It's nothing worse than being short something that just kind of ignores the market. Carvana is a little bit like that. It can kind of march to its own beat. Blackstone, it's in all the indexes. They manage money globally. It's going to be super tied to the overall market environment. So that's an area to consider. I think I already said I'm not short it. What else is that? I think that's it as far as I can see that I wanted to talk about. All right. Let's call it a day on that. So a lot of volatility in the markets. Play it day by day, week by week, month by month, rather than the other way around. Don't play it. Oh, what do I see in 6 months? What am I going to do for this week? What am I going to do today to grab that 6 month window? It's just not. It's just very difficult to do that. It's not impossible. So the quote of the week is Dan Rasmussen. He wrote The Humble Investor. It's a new book. It comes out next month. So I haven't read it yet, but I've seen him on podcasts and YouTube videos before. Very thoughtful guy, runs money. So I like to watch these videos. His style is very different. I think he's loaded up in Japan, value stocks, which is fine. But I like the way they think. I like to watch and listen to how the for lack of a better term, the smart money thinks about managing risk, generating alpha, etc. So right or wrong, his style is totally different than me, but I can listen to him and feel like I can learn something. So his studies, he talks about people in general, and he says, our forecasts are really bad. We really don't know much about the future. And I think I've talked about it. If you think you know where the market's going to go, get out a journal and write it down every day or every week, what's going to happen in the market, and then go back and see how right you are. I think you'd be surprised if you think you can get it right. So I really am most focused on what's the market doing. Today's Friday at the close. Like, I'm trying to balance my portfolio, and really my all I'm thinking about, honestly, is what is the market going to look like on Monday morning at the open? I don't know, but that's kind of how I'm thinking. I'm just like prepared so I can fight that battle. If the market opens really bad, if it opens really strong, do I sell my longs? Do I short more and keep my longs? If it opens really poorly, do I cover my shorts and stay long, hoping for a rally back on the longs? That's all I'm thinking about if in the last kind of hour of Friday tradings is just what's going to happen Monday. And it's served me so well through the years. I'm not worried. I have no idea, nor do I care what's going to happen 5 Fridays from now. I can't predict it. I don't know. So I just try to play as best I can what's going to happen in the short term. The farther into the future we try to peer, the worse we get. Agreed. In fact, he quotes a wonderful study, a Harvard professor, that shows that long-term growth forecasts are perfectly negatively correlated with stock market returns. So the longer you go out and predict what's going to happen, the more likely the opposite will happen, perfectly negatively correlated. He does say that in the short term, there is some value add of a forecast. So I would listen to the podcast he was on. I think it was called, here, let me pull it up for you if you're interested. It's called Marin Talks Money, Merryn. Marin Talks Money, and it's called the Humble Investor. And if you're interested in, what he talks about short-term forecasting and long-term forecasting. So play it as it is. Play the ball as it lies. I think this year is going to be crazy volatile, but I am not putting down like these long-term VIX call options to do what I think the market's going to do. I'm just going to just go ahead and just play it like it is. But in the back of my mind, I'm cognizant, I'm wary of the risk. I feel like the risk you're taking will be a little bit stronger this year. I don't feel like the market's really strong, I think it's vulnerable to weakness. And when it's really weak, I think it's vulnerable to a big, for lack of a better term, short squeeze or strength up. It's just going to kind of do that back and forth, I think. So, but I don't know. I'm excited about it. I think it's a massive, massive opportunity in front of us every year when the market. I love the beginning of the year. I think January is my favorite trading month because it's so optimistic on how well I'm going to do for that year. Whether I actually occurs that way or not, I can be amazingly optimistic about how well I'm going to do, how much I'm going to move the needle on my accounts. So, all right. Well, I appreciate you guys bantering, my bantering. 800-831-2525, MarketSurge@investors.com. Reach out if you have any questions. We will see you next week. Bye-bye.